cool. So, with the whole things that's been going on, yeah, we've had some flush outs continually. The 4 hour is still king for looking at some of these major levels. You will always get stopped out every once in a while, but generally when we have massive losses of level, especially on support and resistance, it gets pretty obvious. Even here, yeah, we had a 4 hour close above the daily, and the next one went right below it. It's just, again, scam pumping, but there's a lot going on, and I just kind of wanted to use this time to kind of go over that and to kind of explain what it is and like how these things are affecting the market. The big thing to remember is that where are we at in kind of like the cycle? If we're looking at stuff like Bitcoin and ETH being down, like dominance being down as well, but stuff like DeFi dominance and alt dominance being up, we've essentially gone from, Bitcoin and ETH, now we're into the alts kind of, and mostly into like, micro caps and shitcoins. And then eventually we'll move flush into stable, and then the whole process has to start over again. So we've already done the Bitcoin move. We did the ETH pop. We've kind of, I'll do like one little slash on the alts, and we're now like solidly into shitcoin trading. So we're getting towards the end of this little cycle move, and the only thing that can happen now bullishly is for Bitcoin to regain levels and then dominance to start swinging back. So the big thing here to look at, and these are why, massive outliers and structure like this, it's really important to see. When we have things like on the funding rates, as an example, we have funding rates now that are probably as high as they've been even back into, what is this? So funding rates now are as high as they were back in March. Bullish funding, right? And all I've done, if you guys have had the red, all I did for funding rates was I, inverted the colors, and I'm showing the individual funding rates. And what we're seeing too is that because of all these things that are happening, because of what's happening with the network fees, we're seeing even ETH, which is shown as the blue line on funding, and the orange line, right, for Bitcoin, everything's just massively increasing funding. So that means very, very bullish incentivized structure, but we haven't gained any levels back, even as they start bringing in the massive funding. So what does this tell you? I'm looking for something, if we're going to hold this level, I want to see them start pulling funding and then gaining levels, like gaining something like that back. That looks pretty interesting to me as far as like structure, because that means people are using this to fill longs. But the problem that we're having now is that looking at the cycle of the market, where now shit coins and all these other things are performing and people are, tossing money into these things, there's not really a good argument to really look for a continuation gain until we actually get a gain of something. The big thing that kind of has me, a little bit, not angry, but kind of like miffed in this area, is that we farmed out all of the volume that we can do higher time frame in the structure now. Like there's nothing left to do locally except for essentially go back to gain to the high to go back into this structure, or to just quickly lose the low and then break down to 25 and potentially lower. Because all of the structure that we're doing now, we started doing it back in March. We now have like weeks and weeks of volume being filled out in this level. So we're about near the end of it, I think. And if the fact that we're near this cycle, this means that a requirement for me to try and get some levels going back up, yeah, you can look for a local regain of the daily to go back up to the April Q2. That's kind of like the midpoint of like this local range to some degree. But until we gain something back, I'm not super interested until it actually happens. And like the gain there is much more important to me than, even the local gain. The local gain, yeah, sure. That's still a potential lower time frame to go higher. But when the daily open becomes that restrictive, it just means that, well, there's a lot of people with the network fees, with all this stuff going on, that are really starting to push it down. Some things that are working for us, especially in this area, like after looking at funding, is that we have things like the on-chain metrics. The on-chain metrics are great because we can see massive stablecoin demand and whatnot. The big thing that kind of sticks out in my head is the fact that we're down here kind of at these nasty, janky lows, kind of how we were back in the 22nd, 23rd, 24th of April. So what can we kind of expect in this structure? We should, in theory, right, have some type of bottoming structure here. If we lose this low, essentially losing that 23, that would be the catastrophic loss of essentially that structure. So all of this stuff, the fact that it's perfectly being tested means like this little like $80 range from 27,329 to 27,253, this is it. That must hold. That's all of the 4-hour block structure on the daily time frame. That's as low as it can go as well. We've done everything. It's fully tested. There's nothing left to do except once you pop it, you're gone. Done. So we're getting kind of like to the point here where there's something big's about to happen. We're getting some trend line change on the 4-hour. We're doing some 4-hour higher lows. And for this to hold, we can't lose these levels. Realistically, there is still an opportunity for this to pop down, but then they need a quick regain and potentially the daily. But we're at the lows. All of this stuff has to hold for significant gain moving higher, at least to the midpoint of the range, at least to the weekly open. And that to me kind of says, well, if we don't do that, it looks pretty freaking wrecked. And that's kind of the issue that I'm having here. Especially on the daily as well. We see how important these levels are, even on, maybe not so much the 27,329, but the fact that that level, the 27,253, is respected on the daily, the 4-hour, the 1-hour. All of this structure tells me it's like this is the level that needs to hold. And if we start losing this stuff, it's going to get bad really, really quickly. So we're holding it. We're holding it right now, and it's kind of janky. It's kind of like on the edge, but we need to gain something back. And just because the 1-hour is looking the way it does doesn't mean we can't still have a continuation move back up. So higher time frame as well. Looking at the daily, yeah, we come down, but not really any massive bottoming structure. It's not like we were, essentially back down here with the breakdown. If we do end up breaking down and doing something like this, that kind of similar trajectory move would essentially take us at least to these highs, down at like 24.9, 25K, which is one of our targets, or potentially lower to 23K. So the big levels higher time frame below us are 23.1, call it 23.1 and 25K. And this is structure that would need to hold massively. And then we'd have to probably come down in here and then wick out and do some like crazy farming of structure in like the downside. One other thing I kind of wanted to kind of show, I don't know if I have it saved here. No. Maybe I do. Okay, let me load this. There we go. This is something I shared last night because I think it's important to notice these things. So this is using the Bitfinex shorts, and the reason I'm using this to kind of like look at like what the major changes are is that we've had very, very few shorts, and again, this is just something to keep an eye on. This isn't essentially it's a part of correlation to what's going on in the market. We have some increases in shorts, nothing like what we had back in the move in November, right, where that just spiked up massively, everybody shorting the crap out of this whole level. But we're seeing some growth here, and every time we've started seeing, the low points in the short structure, that starts ramping back up, we get into major high movement. So the only thing that can really save us now is if we see some major spikes in shorts without actually losing the levels. And that would mean that we would probably use that kind of short liquidity to move lower. Now there is an opportunity if we do actually nuke down and then the short starts spiking up, we could be then seeing a potential reversal where, we start having enough short liquidity to move up. And that's been our issue with this whole upside move, right? All of these major shorts, like this move up here, took all of the shorts that were created back in November, back in October, and popped everything. Took everything out for several months of shorts just getting wrecked out to make this high side move. Now with that, we haven't actually gained above anything. That's the important structure to gain above, is essentially this, where we had a deviation, right? We popped above, closed above it, and then closed right back below on the weekly. We're failing it now. It's looking weak as far as structure. So now you've got some higher time frame targets to kind of look at saying, hey, we need to gain these things back to go higher. And right now we're failing essentially the weekly range structure that we did back in June. This is a really significant level too, because this was, essentially the hold to try and hold up the entire, bull market lows, which we didn't, right? It failed everything. and then nuke through it and close, and it was done. Like by the time that happened, everything's bear market. It was done. So I kind of just want to use this a little bit to reiterate some of the higher time frame stuff and why that's so important. And then to kind of correlate that in the lower time frame, which is, well, this is happening higher time frame. We're seeing a spike in shorts as prices starting to grind down. And if we start seeing major failure, you're going to see the massive spike in the shorts. Even in the move down that we did back in March, remember that move down to like just sub 20K? We saw that big spike. That's a requirement to actually build enough shorts that we can then liquidate them out for movement back to the upside. So again, what are we seeing? We're seeing some natural growth in shorts, right? At the same time as shorts are actually playing out and failing. So we could be seeing that. And that's the kind of issue that I kind of take with the local price action. It's pretty, overall, I'm not super happy with it. I don't think it's like really clean by any means. And then looking at the stuff we have locally, yeah, it's just rough, right? It's just really rough. So we need to gain something back. That's starting to move, essentially still very, very bullish volume, like funding rates, extremely bullish funding rates. This is one of the first times we've also seen ETH funding holding stuff. And that's really important. So kind of reiterating that, just want to make sure that we're all clear on like what's actually going on, some of the market stuff. Lower time frame as well. Want to look at the MDVD just to see where we're doing volume wise. The big things to remember here is that we do have the disparity. We had the disparity back on the 1 hour here by the time that closed for potential continuation. So we don't want to lose this low block. That's essentially losing out any local volume that's the upside. So it still plays out in the 1 hour. I think higher time frames with this indicator, it's not as effective. But lower time frames for scalping, it's pretty nuts. And now that we have some volume above us, we're kind of in a bad spot until we gain something back. So essentially what you would want to see in the current hour was be a gain back above, and then these kind of low points of short volume provide liquidity to move back up. So if we gain the daily back, we can start seeing that move back. But again, we're now fighting to regain every single level moving up. So there's a couple things going on with it. Yeah.
Sorry, can I ask you a question, or do you want to do that later?
No, go ahead. That's fine.
Awesome, thank you. What does it on the MDVD? What does it mean on a small time frames or big time frames when there is no volume in the bottom or the up top?
Well, there's always volume. When you have stuff like here, when you have a little cross like this, that's essentially where all of the volume is.
I'm sorry, I'm talking about the MDVD itself, when there is no volume in the bottom or the top, where you see the red lines and the green lines.
Yeah. So this is only looking at the local stuff. This is why the volume range volume profile. If you're going to use this, the most effective thing is using it higher time frame.
Higher time frame.
Yeah, you can use it low time frame if you have some structure around you, but as an example, like using it here when we have look back going into the low structure we created back in November on the daily. What do we essentially have in this zone? What's underneath this? It's a volume dead zone, right? What am I doing? Just use a block, right? Does that make sense?
Yes.
Yeah. So this is like the higher time frame use of the volume range volume profile, which is if we lose the high volume area, which we have here, we have a very low volume area below us, and then increasing volume to the next kind of point of control, which is down here at 22.8. Arguably, because of some of the highs, I'm taking the higher point of like 23K. So we start failing here. Essentially, you're looking for an eventual target here, or at least a local hold in this volume dead zone, where it just goes crabby sideways. It won't ever look perfect, but something like that.
What does it mean when you see the volume right up top of the volume profile? What does that mean when it's like so little high? Yeah, what does that mean exactly?
So the red volume essentially is just showing you where the price is currently. So it's basically, if it's bearish volume, we're underneath, this amount of volume. So we're underneath currently, the price is currently underneath the majority volume in this entire upside move. Does that make sense? So if that's
yes.
Like the volume high, right, for this entire, upside move, essentially, if you take it and you just say, well, this is essentially like the higher volume area, right? Where are we? Are we underneath the major volume areas? Yeah. So we're underneath the major volume, which means we're closer to the downside. We have a major dead zone below us. It kind of says, well, we're pretty much at the level that must hold, because if we lose the volume there, we lose the block. Any bullish volume that's in there is gone. Essentially completely gone.
Got it.
Yeah.
Thank you.
Does that answer your question?
Yes, sir. Yes, sir. Thank you so much.
No problem, man. So yeah, it's a good point with the volume profile, because of the look back on it. You don't want it to look back too far and to have it stable on the side. We can then see, even here in the structure. I mean, let's go to the 3-day real quick and see what we got. So I'll get off log. So, above us, going back to the mid of last year, we have some lower volume areas all the way up to about 37. These are part of the reasons why we talked about 37. Higher time frame on the 3-day here. What do we got? We got a general low volume area in the higher time frame zone. And that's kind of like the whole point of this, which is, well, if we start losing this block, it's pretty much wrecked on any high time frame. Looking at the local 4 hour as well, you can use these points of control effectively to kind of like mirror major levels. And when they line up with major levels, like here on the May, or here failing underneath the April Q2 with a higher volume area that we're losing, we're essentially now saying, well, there's a lower volume area, lower time frame above us, but we need to gain something back to potentially test it. So there's still a potential that we hold this bullish volume until we don't. And this is the level to hold. If we don't hold that level, it's gone. It's gone. It's off a cliff, potentially, until we regain it. And that's the big thing to remember here, and that's why we're kind of looking at it. With the local structure as well, and like looking lower time frame, the fact is that like these two levels play out very nicely on low time frames also. And even looking at the local structure, we're getting kind of towards the end of the rope in a lot of ways. So we would really have to regain the daily open. There's a lot of volume above us that's bearish in position, and there's no bullish volume that's in position locally. The only thing we have is, even on the 15-minute, is down here at this structure. That's why it's so important that we hold this. So, tying all this stuff kind of together, essentially, we still have very bullish funding, but it only works if people are buying and regaining levels. And what I look for the most is that, hey, are we swinging back up? They're pulling bullish funding, price is regaining a level, and the oscillator is moving back up as well. If these three things start to happen, I want to see gain of level and then go higher time frame to see that we're actually moving in that right direction.
What about the volume? Do you look for the volume to start increasing as well? No, I'm sorry, for the funding to start increasing as well?
No, if you have increase in bullish funding as you're going up, it's actually more incentivizing that you're going up. But usually, and what we've usually seen is that as you go up, they start pulling the bullish funding, which kind of solidifies that that's the low, right? So it's actually more bullish if they increase the funding as we're going up. That means that they're still incentivizing longs to go further to the upside. And that usually only happens when there's a massive disparity with people trying to short everything versus long. If that makes sense.
Let's just say that you've done the three things on the harmony oscillator, on the price, and the funding, what you just drew.
Yeah.
And let's just say we have gained the daily open, okay. And the funding, and the funding is doing that curve that you just drew earlier. Mm-hmm. And then all of a sudden we got a little bit of a bearish funding, and then all of a sudden the funding switched back to bullish. How do you explain that?
If we're gaining levels,
if we gain the daily open, and then the funding switched to be bullish again, that's continuation, right?
Yeah, most of the time that's continuation, because if they're pulling funding as we're going up, which is normal, but then we're gaining a level higher and then they're increasing funding again, it means they're still incentivizing the longs. Now, that's one part of the correlation of it. That's just like one thing. Like funding can still be entirely, like there's a point where funding will not translate. It's the same thing as sometimes lower time frame, the oscillator will be pinned down in places, or go to highs and not really fail. It'll just kind of middle around in kind of like a larger curve. So it has to be a part of a couple things together. So even though funding is very bullish here, we still had overbought condition, failure. Then we had essentially, what is that? A bear candle that took out the top, bearish volumes in control of the local move. By the time even that downside loss, that volume going below, it's continuation down. So we're still having that. And the volume here, again, the candle's still open. We're seeing some upside move now, but we need to gain some of the stuff back. We're essentially closing the 15-minute out above this stuff to give us some saying like, well, these shorts are now out of position. And that's the whole point. That's the MDVD in a nutshell, which is which positions are out of position. So when you see people out of position, it kind of gives you a better hint of like what's going on. Here, you have bearish volume at the high and bullish volume below it. Is that bearish volume out of position? No. How about here? You have, bullish volume at the high, you have bearish volume, and then you had a failed retest. That's exactly what it should happen. It's actually a bit of a meaner retest. They try to rip it back up, quite low volume, and then moving back to the downside. So, essentially by the time that closed with that volume, that entire upside swing is done. Because the only thing they can do on the next candle to invalidate the downside move is gain the high of it. That's the only thing they can do to invalidate the downside. And it's a much higher probability to go lower. And that's what we're kind of basing everything off of.
Sorry, buddy. That's the high of the swing. Gaining the high of the swing, right?
Yeah. Essentially. We literally went all the way to the high, tested it entirely, and then closed below the swing. Like, there's nothing left to do here. Like, it went high, it failed to make a new high even on the move up, because that was the high that we created. Came back down. It's a bit of a nasty one, but it's still failing. By the time you did that, which we turned volume back on, bearish volume in control, any longs at the high of the swing out of position, it's continuation. Most of the time. Nothing is 100%, but most of the time. And then you've got other reversals like this. So there's two kind of like real ways to look at it, which is, here you've got movement down, but you've got bullish volume at the lows and then a strong close to the upside, right? So that's a good sign that, hey, we've created some bottoming structure. Or here, we have bearish volume to the upside and bullish volume can't close back above it. Even though it's kind of closing above that candle, which was the high, which again, like I said, this is pretty janky low time frame price action, but it's still kind of doing what it's supposed to do. It's still out. That's still in position. That's in position. These highs, this essentially green candles. By the time that happens, it's all of these things are out of position, and that's what we look at. Like here, yeah, green candle, that's fine. It's great. It's a strong bullish candle. Let's see if you can close above that and get some bullish volume, get the bearish volume out of position. That would be awesome. Here's your lower real quick. So here, you've got some previous 3-minute strong bullish candle. The bearish candle's out of position. Again, you want to see the gain, essentially, of where you lost structure and went to the downside. But overall, again, the lower time frames, it'll work out most of the time, but there still will be instances where stuff will be out of position. But what you end up looking for mostly when you look at very low time frames like this is that when you have essentially reversals, whereas high created, right, low bullish volume, bear strongly in control. Even though we had a bullish volume, that bullish volume failed to gain the previous bearish volume. So that bearish volume is still in position technically. And it's a small disparity, but it's still enough. What does that tell you? This high matters. If you don't go higher than the absolute high of that candle, you're still looking for failure. And by the time you actually lose the floor of that move, it's pretty much donezo. But again, This is very low time frame, very low volume. And yeah, even here, we're seeing some nice changes for potential changes back up. Let me just look at the flow real quick, since we see the funding rate's pretty clean. We'll see. See if we can gain above it. Still below it on the 15-minute, which isn't, the best. We got a couple minutes. Any more questions on the indicator stuff or like the current price action? Otherwise, I'll move on to something else.
Hey, yes, Chris, will you?
What's up?
Will you look at take all those settings right, and the exact same time frame, but will you look at LDO real quick?
LDL?
LDO, Lido.
Oh, Lido.
Can you tell from there which direction it's going to go?
You're trying to get me to tell you.
Well, I want to make sure I'm looking at this right.
Okay, so tell me what you think first, and then I'll tell you what I think about that.
All right, so it looks like... Oh, hang on, let me look at my chart. It's kind of hard to see here. Okay, so...
I got a question next whenever Alex is done.
Yeah, if I'm reading this right... oh, shit. I want to say... Is that... See the tallest candle right there? Does that mean that candle's in control?
So that's the current high in the move, right? That's the current high that we have locally, right?
Yeah.
And there, what happened on the high, essentially, is that you had the bullish candle in control, the next candle, bearish volume in control, and we moved down. Now, there is some bullish volume above it, but we're not gaining new highs. So, in my head, just looking at the sideways structure on this volume, this is less appealing to me. Locally, it looks like it's potentially bulls in control until you lose that low. So, if I turn this off real quick, essentially what you're looking at is, this, I'll draw a line. Essentially this, right? This is the point where bulls are in control locally, 1.893. So that looks good for potential bullish continuation. But I will say on the lower time frame, when you have a lot of sideways like this, where it's like, oh, bulls out of position, bears in control, slight move down. Oh, go back to the upside, bulls still out of position, go back to the downside. Oh, we had a bearish or a bullish candle, but then we still moved back to the downside. This to me says that this time frame isn't suitable to trade locally, just because of, you have multiple kind of conflicting things saying like, well, we had bears in control here, the bullish candle's out of position, and now that bearish candle's out of position. So, gun to my head, it looks like essentially we're going to have a bigger move up. That's just, flip of a coin to a sense. It's like I can't really base on anything locally. Looking at the higher time frame, and we look at that volume, the bullish volume, we're gaining the point of control at 1.895. That looks good because the bulls are still in control technically, right? That bearish candle was bad, but that's not quite out of position. The current bull candle looks strong because we're, essentially the mentality here is, yeah, the oscillator's high. Yeah, we're still potentially failing the structure. But what's the actual failure that matters, especially on the 1 hour? Well, essentially losing this point of control, right? Losing this thing on the higher time frame. Losing that same level that we just marked out on the low time frame. So even though the oscillator's kind of maxed out to the upside, the thing that says in my head that we can't lose is that local level on the hourly, because the 15-minute, it's a bit of a toss-up, right? That's the problem that I have. Is it's not always going to be perfect, and when there's this kind of disparity, it turns me off to saying like, well, that's not really a tradable area. And then I defer to the higher time frame. Then I look at the 1 hour. What are we doing? Are we pretty high on the 1 hour? Yeah. Is that pretty typical for LDO to kind of like do big bottoms, right? Bottom and then go lower. That type of stuff. Bottom and then go lower. Okay, it's pretty typical for the candle or for the ticker. So what does that mean? Can we go higher than this? Absolutely. This is an oscillator. It's not price action. So as long as this point of control is in play, this 1.893, which just happens to line up perfectly on the 1 hour, I think it looks okay. But if you start losing that, it looks bad. So what are we at now? The 15-minute? Yeah. So you'll see on the next candle. Where do we not want to lose? We don't want to close back under these levels. What happens if we close under that? Losing this bullish volume blocks. Where do you go? Well, you go back down to the next, essentially bigger blocks of bullish volume. At the 15-minute, where's the next major level? The daily, weekly. So we can then say is, well, it looks like it's strong locally until we lose it. Is there a nice entry for a long from here? Not really. But is there a nice entry for a potential short if we lose some levels? Yeah. What can we target? Daily, weekly open. What do we have to do? We have to lose levels. Does that play out on some price action stuff? Losing kind of like this floor structure? Yeah, but we have to do it then. So that's the way my brain works when I'm looking at these kind of like smaller time frame scalp trades. It's like, yeah, we're kind of maxed out on the 1 hour on oscillator and stuff. Yeah, we're failing to make new highs, right? So what do we need to do essentially to have a continuation move up? You need to make new highs. You need to start gaining over the local structure. Where's the local restriction? It's there. We're starting to bullishly backtest it for potentially continuing. Yeah. So we're already gaining higher. We're already making moves up. That was kind of like the inkling I got, I guess, gun to my head, that we try to gain above it. What does this tell you? If we lose this, essentially, we're losing the high, and we should come back down to bigger structure. Until then, we're kind of we're moving the upside of this range. So we're essentially at the level to fail, lower time frame. What's a better confirmation of failure? Losing the structure. Until then, your priority's up. Does that make sense?
Oh,
kind
yeah.
of?
Yeah.
So there you go. Yeah. So, see if you can break the high.
Chris,
Yeah.
do you have time for another question?
Yeah. I got time.
Fuck, am I gone again? God damn it.
You right? You right there? He's muted. It's all right. Any more questions real quick while he's sorting this stuff out? KRE? Yeah. I mean, yeah, super healthy. I mean, that's off a cliff too, and that happened like almost 2 months ago. Yeah. I mean, scary reality is that it's literally testing everything it's already needed to test. That's what worries me the most about the overall market health is looking at this here. Let me just turn on the sensitivity a bit and see if I can get some more. Yeah, I mean, essentially, it's already tested everything it's supposed to test. The stuff we have here, this is like the COVID insanity back from 3 years ago. It's crazy to think that's been 3 years already, but the only thing we can do is literally hold this right here. Because if we don't hold this, there's a pretty damn good argument that we can run back down to like 08, 09 levels. And this whole scam falls over. What I don't like is that you're essentially also in a expanding structure. So essentially, you're doing this, right? No clear definition of line, no clear trends, no clear anything like that. And that's worrisome. So let me just take it off log real quick. Or put log on. On log, we could see some sort of trend making higher lows, which kind of makes sense. But overall, I don't like the fact that we've now broken down. This locally needs to hold this structure. Like, I'm dead serious. Like, dead ass needs to hold this. Like, literally where we are. Like, that needs to hold right now. Well, that's the worry, isn't it? Is the fact that we could literally have a snowball effect of collapsing banks and whatnot, which is already happening. I mean, essentially, that's what's happening in the U.S. and a lot of places. Is small boutique and regional banks are getting destroyed, and the larger banks that have liquidity still are gobbling them up, and it's just essentially becoming a very, very public, very, very centralized banking system. But this is very worrisome. Essentially, is that we're still doing this. That needs to make the higher low like right here. Like, not even kidding. That literally needs to be the low that we did today. Yeah, and then inflation go crazy, and then they pull. Yeah, I mean that's really it. Well, they can never run out of money. I mean, they just print more. The Federal Reserve. Yeah, they can't default. If they default, the whole thing collapses.
Isn't the debt ceiling thing going to happen here? Don't they have to make a decision on that pretty soon?
I haven't kept up on it, but I'm pretty sure when is the debt ceiling vote?
They have, I think, June 1st to make that decision. Either default on their payments or raise the debt ceiling, which will fuck
Yeah,
everything.
something like that.
June 1st, I believe. I think it's 75% sure it's June 1st. Yeah, and
Yeah.
to you, Chris, Bed Bath and Beyond closed down, which is one of the major retailers, filed for bankruptcy. God damn,
Yep.
True. Yeah, they're gonna liquidate a lot. Well, yeah, if I get back to it.
Yeah, I mean,
retail.
it looks like they had to file. I mean, off their highs, which weren't great. I mean, they went 99%. God damn, that's always like the terrifying thing is when stocks start trading like shitcoins. That's so terrifying to me. And people think it's like, oh, but it's just like I think I've become numb from the crypto markets. But seeing something like that in 2 years essentially went down 99% for like being a giant industry. Like, that's pretty wild.
It's 99.92%.
I mean, this is just a dead cat bounce, essentially. If they filed already, it's pretty much done. It's done. I mean, God, they were trading at $30. Like, imagine all the people that got wiped in that sucker. No. No, definitely not. No, I didn't. I messed around with it a little. Yeah, they filed Chapter 11 yesterday. We'll see more go down. I'm assuming. It wouldn't be the first one. I mean, look at MT Gox. Like, Will could tell you guys stories about that crash. Like that they took like 70 or something more Bitcoin from him back in the day. But it's just a crazy thing. Like, people still think, oh, the crypto market's not mature yet and all this stuff. And it's like, this is an established business doing the same thing as a shitcoin. So I think there's more pain to be had, essentially. It's not the end of the world. It's just a bit frightening to see it in kind of in real time. There you go. Pop up, close below. Massive bearish volume. Looking at close below. If you lose that low, you have confirmation of the lost high that goes back down to the daily weekly.
Doesn't that look like a lick grab?
Yeah, that's exactly what it is. It's 100% a liquidity grab. Look at that. 100x and 50x shorts wrecked from the local structure. So yeah, but like the simplest way to look at that is 0.75 is 100x's, or 1.5 is 50x's, and that means all of them. There's no chance of anyone being in those positions. So all 100x and 50x liquidated. 81 who was in shorts from the low that were holding on, they're all gone. And yeah, the only way again that it can save itself now is that now it has to create a new high. That's the only way to invalidate downside. And then here, on the previous candle, you're also getting some love from the low time frame flow indicator. Or actually, let me put this on. In the cross there, you see that first little shift. Now we're shifting away. Pop up, shift away. You're seeing the beginning of a kind of divergence there where they're moving away from each other.
Chris, on the MDVD, small time frame, 5 minutes, 15 minutes, 3 minutes, when there's nothing but green. Do you think that's like a strong confirmation?
When we're on like the 3 minute, let me just switch back to Bitcoin.
I'll give you
yeah, give me an example.
YFI. I want you to look up the price at 71.15 and 7,300. Have you auto charted on? Yeah.
Yeah. So you're looking at this on the 3 minute or the 15?
Do you have? Yeah, you do have it. No, I was looking at it in the 4 hour, and I switched to the 1 hour, and I switched 30 minutes, 15 minute. And if you look at it in the 5 minute time frame, all you see is green. I had the chance to long 70, 73 is 71.50, but it was below the daily, so I did not mess with it. But I longed February at 73.01. It was around 5 in the morning. Yes, 73.01, correct.
Okay.
And it was nothing. My stop loss was below February, and
what were you targeting?
Hold on. I was targeting structure in the 1 hour time frame, which is the daily open is my first take profit.
As a short or a long?
Long.
The daily open's above. You mean yesterday's daily open?
No, today's daily open. Well, so my daily open right now is at 75.01.
What are you trading it on Mexi?
Yes.
Okay, so I'm glad you brought this up. The Mexi account, Mexi trading, their date and time is going off the wrong mix. So yeah, So their time frame, they're firing their daily open from 4 p.m. UTC instead of 00 UTC. It's a big disparity. I'm glad you said something, but that's an important thing to note, is that their thing actually says that. Like they're actually taking their daily opens from their exchange on their time frame.
Yeah, I think KuCoin is different as well.
Yeah.
That way.
So my recommendation is that make sure, okay, it's always good to use the charts that you're trading on, but it's more important to make sure the daily opens are the same. And when you see a disparity like that, you can do one of two things. You can either turn it off, right? Just like turn it off or change it, because this is their exchange giving the bad data to the indicators.
I cannot turn off auto charting. I gotta have, like, auto charting doesn't come off.
So what I would recommend is that, okay, let's look at the price, 73.89. Let's look at YFI on Binance, 73.85. So about a $4 realistically, if you talk about like the actual price of that. That's what, 0.1% difference, less than 0.5% difference. So yeah, 0.05% difference. I think that's a negligible difference to be making sure you're using the chart that has the correct data.
Which is fine.
So that's no fault of your own. There are other ones, like all the major ones, like Bybit, Binance, those things, they have the right data. But I'm really glad you brought it up. But just saying, like they had those smaller exchanges, Mexi, KuCoin, they pull their open daily close
based on their time frame,
based on their exchange, and that's so. I appreciate you saying that, and it's a very good point to make.
No, I had no idea. I'm glad you catch that up. I was no idea. I was telling you my daily open. It's somewhere which you don't have. You have your daily open by February.
Yeah.
Which I have it somewhere else. I had no idea. I got no clue.
Yeah. Well, I'm glad you mentioned it, but it's an important thing to kind of double check. Like even me, like sometimes I'll just keep looking at it just to make sure I'm not off, and like to look at the different levels, because when they're wrong, and if your levels are wrong, like right now it's bearishly divergent. Like this looks like it's failing, right? That looks like failure. You're just looking at the 1 hour. That's a pretty rough 1 hour. With the time frame, it's not with the price. The price is round about the same. It's negligible, like 0.05% differences. It's not the wildest difference. So, just giving that a kind of a heads up, and I'm really, yeah. So you have to use it on if you're using the auto charting and stuff, you have to do it on, spot index for Binance or whatever, something that has the right daily opens.
Got it.
Yeah, so, and you did. It's nothing you did wrong. It's that exchange pushing bad data is what it is.
Well, I mean, it's imagine me just looking at February along in that and the MDVD, where you have the February and the daily open both stacked up at the same place. That's like an extra confirmation right there.
Yeah, it is.
My first target was the daily open that you already have plotted, so it probably would have never reached there.
Yeah, it's looking.
No, I closed 50% of it right now. But yeah, it was the volume indicator. It shows all green, and the 5 minute, 15 minutes. That's what gave me the go ahead. The MDVD, it was all green as far as the light the lines on the right hand side.
Oh, you mean these? Yeah, this is So this is all it's showing is volume below you is below you, so it's bullish volume because essentially this is showing you the price line.
No, even entered along, there was no red volume. There was no.
No. You're not understanding. It's like any volume above you, above current price, is red. All volume below you is green. All volume above you is red. it doesn't change. It doesn't mean it's more bullish at all. This is literally just showing you the volume profile and saying that, hey, this is the price line. This is where you currently are. This is the bearish volume above you, and this is the bullish volume below you.
What if there is no bearish volume above you at all? It doesn't flash, right?
Well, yeah. So that's again the look back on the MDVD is a certain number of bars. That was the only way we could put it in there to where people could actually use it. So like here, as an example, I'm on the 1 hour, right? Yeah, you're at bullish volume below you. You got a pocket of low volume above you to about the lows that you had at 75, right? So if you gain above 74, 60, some of these bigger swings and regain 75, you can talk about higher just based off of volume, but that's like one thing you're basing it off of. The fact that they're green or red has no bearing at all in the fact that like, oh, it's more green below me, so it is going up. It just means that there is more bullish volume below you, higher time frame, and that's good as long as you're moving up. But it doesn't change. It doesn't mean that something's more bullish. It doesn't, red volume above you doesn't mean it's more bearish. It's essentially just showing you the price line of where you currently are, saying, well, if this red volume is above me, what's the important levels to kind of gain back? Essentially, you've got like some high points in here. Does that make sense, or is there something you're
lost?
On?
Yeah, I'm
okay.
lost.
Okay. Don't look at this. Don't look at this green stuff or this red stuff. This doesn't mean something's bullish or bearish at all.
Okay.
All that happens is that where the current price is, if I put on, do I have that status line title, open market? Yeah. So if I turn that off, my price line is 73.69. If I turn volume delta back on, it's still 73.69. That means it's just red because it's above you. It's just green because it's below you. It doesn't mean that like this is going up. Just because it's green doesn't mean it's going up. It just means that there's more volume below you that's potentially support, potentially bullish.
So when the price moves up, the candle gets calculated, and that's how you get the volume to flash if it's bullish or bearish, and how big it is.
Yeah, but that doesn't mean it's going up or down. It just means it's above you or below you. Like, just like the only thing significant of like here, right? The only thing significant of here is the fact that it's gaining above the level. It's gaining above what was previously bearish volume. And it won't even load because it's going too fast. But essentially, that's all it is. Price is above it, and that's why it's bullish. When you have a gain of major bullish volume, that means something. But the fact that this has just happened to be green doesn't have any bearing to it going up.
Okay, can you explain how does so what makes those the candles bigger than others on the volume indicator?
So you mean these candles? Why this? Yeah. So why are these longer? This is because there's more volume in this area at the price. Volume. Yeah, since we're above it. So it, like again, this is where a high volume candle is. This is just high volume. The fact that it's like green doesn't necessarily mean that it's all bullish. It just means that it's volume. It's like it's below us. So if we come back down, right? Where do we want to hold? We want to hold the high volume area in the structure.
Okay. All right. I get it now.
Yeah, but
thank you.
Good question. Just to clarify that, but yeah, it's just it happens to be green because it's below us. It's showing you the price line to make sure that you're lining up the fact that hey, there's a bearish. There's not effectively bearish, but there's volume above you, which is potentially bearish as a stopping point. It's not potentially me saying that this has to be support. It just means that's where we should hold, and where does that coincide with some other major levels?
Got it.
Yeah. No worries, man. Yeah, no worries. But yeah, again, good to clarify though. But I mean, until it starts failing, it's finding some support, and it's no major bearish volume even on the MDVD on the 1 hour until you go higher. It's just right here. It's a little bit like low time frame. It looks like it wants to pull back. Higher time frame, it looks like it can still go, but that current 4 hour, like it looks okay, like higher time frame, but I'd be happier if it gained something back. Realistically, the gain, the long, the easiest long was from here. It was like that retest, that bullish retest. This is classic. This is the classic under over. This is our major level, right? February daily open, major level. We came below it, right? We came below it, pop back above. Came below it, pop back above. Closed below it, bullshit back test, bullshit closed above it, right? Here. And then back tested it. The moment we did this, bullishly over the candle, you're looking for the long because you're gaining a major level back.
That's exactly what I did because I had the chance to long like 7100 or something, and I just kept looking. That's the 4 hour, and I was waiting for the candle close for the next candle, and then when the candle close happened, I was switching into smaller time frames, and you can see it happen in the 5 minutes, where we had a red candle with a wick that closed at the February and the daily open and just took off after that. That's when I knew that's a confirmation of a trade. It was in the 5 minutes. Right? That's
and that's the big thing. It's like it had some nastiness with the price action because it created a new low, then closed back above. Then it failed, created a low. That now became the point to hold. It held the low, gained back above the range, which is also the February open, daily open for a long. And that's the way. I mean, yeah, okay, it's hindsight, so it's easy to say in hindsight, but basing that off of the volume we had, even lower time frame, basing that off of the gain of level, it still plays out. Bull div, high volume node, hold a structure. Do we have anything that's out of position on the volume?
And you see those closes, those 3 consecutive closes, it's like a triple bottom in that small time frame. It did not want to go below 7180 or something.
Yeah, again, like the whole double bottom, triple bottom thing, that's a very high time frame pattern. Like on low time frames, it's a little people scam it a lot. I will say that. That's just me. Is that a lot of people there'll be a lot of scams with that. Yeah, locally, yeah, you had the bear. You had they pulled the bear div. That's nice. Candle closed. Bullish volume below you now. Maybe you can get a continuation. If it does start failing, what's the level you can't lose now? Lower time frame. You can't close below like that. If you have bearish candle close below that, that's done. And you're going back down there. And then you want that to be the higher low. Or you just continue from here back to the upside. But the one thing I will say about like the 15-minute and stuff like that, I'm not, sold on super low time frames. You guys know that. Even on the 1 hour, again, you've got some areas that are in position, like the bullish volume there in position tells you the importance of that structure, right? Until you gain green volume above this stuff, it doesn't look really strong. So anytime you have major gains over structure, that looks fine. But again, the high time frame is always the important one in my head. And higher time frame, you're seeing some, potential sell pressure, but it's always being bought back strong on the 1 hour, which is good. So it looks like it could potentially continue.
Stop loss and profit. This is a free trade now.
Good. 50. That's the that's the way to play it. Like that's it. Like literally every day I say it, and it is your capital risk, your risk capital, whatever that number is, right? Your risk is 1 or 10 or X or whatever it is. Once your stop loss is in profit, you have no risk to your capital.
I am religious about it right now. My first take profit, the stop loss goes into either 50% of the time goes into entry, or 50% of the time, if I'm not too sure, it goes into a little bit below first take profit. I'm like religious about it. Just like you guys are like everybody religious about putting stop loss and take profits. Like as soon as my first take profit hits, that stop loss is just moved. And it's so easy because you just take the mouse and you move it up to where the entry is. You know, it takes like 1 second to adjust it. And I start looking somewhere else.
Yeah. And that's it, man. That's the name of the game. But I got like 2 minutes and I gotta get out of here. I got a bunch of stuff. It's gonna be a little bit sparse probably next week and the week after. I'm gonna try and get a Will and a couple of people to fill in to do some more of the what do you call it? The firesides. Just because I'm having a kid, so the due date's in about a week. So yeah. Gonna be busy with that for at least a week or two, at the very least. But I'll make time for it. No, I haven't. Yeah, well, I'm still either way. Well, I'll make it work. I'm still gonna make time for this because this is important. But yeah, I think the biggest thing in here, guys, is just being really careful. If you gain something back, great. If you don't, you don't, and don't fight it. And that's the big thing. It's like, it worries me when you see stuff like that, and you see like the macro market stuff looking really, really trash, and what if they default and all this stuff. Oh, that'd be nice. Let's get that bull div. If we can close this hour out with a bear div on the. It's already locked in. Hold on. I think it's already locked in. I actually think it'll be good for crypto. Well, think about this. If the US defaults, what's the value of the dollar going to do? Are people going to hold dollars? Are they going to look for other ways to hold value in currency? Yeah, Tether. I think Bitcoin, all those things will do well. I'm not really convinced. I mean, essentially, you'll see changes where people will, if that really happens, and I really hope it doesn't, you'll see things going back to, trading on Bitcoin charts, which is like ETH BTC, Sol BTC, and BTC becoming the underlying asset that people trade to hold value. And basically the mentality goes from liquidity by using stable coins, which is what we've been doing, back to using Bitcoin as the underlying asset to trade. That's what would happen if the dollar starts failing. That's what I think would happen. Nah, I don't know. China is not as bulletproof as they think. If the U.S. goes down, China's going to get hit really bad. Yeah. Plus, they're also demographically they're at an upside down pyramid. So their demographic pyramid basically means they have a lot of old people, and if these are old people and these are young people, down here, there's a lot more old people than there are young people, like very old people in retirement. So. Plus, their economy essentially depends on the U.S. So I don't think the U.S. going down is not a win-win for anyone. I think that's a really bad thing for everyone. Yeah, well, it's just the wildest thing, man. It's like you never know what's really going to happen. What if the next pandemic comes out at the same time? And then all of a sudden it's like the Spanish flu plus the Great Depression. Could happen. I hope not. Well, I hope not. Yeah, I think it killed a third of people globally back in the Middle Ages. But every time that happens, what do you have after? I mean, if you didn't have the Black Death, the Black Plague, you wouldn't have had the Renaissance, so. Because it freed up resources. But let's hope that doesn't happen. That'd be terrible. All right. Well, I got to go now, though. If there's anything else, any last things, otherwise I got to bounce. I got a couple things I got to finish up. I'll try to make another one of these maybe for Thursday. I'll double check if I have time.
Thank you, man.
Yeah, I will. All right. Well, thanks everybody. Have a good one.
Hey, if the wife lets you, I'm sorry, if the wife lets you, try to cover up a little bit of the swing, like the swing session that we did a couple weeks back. You remember that?
Oh, about like looking at swing structure and highs and stuff.
I would love if we can just refresh my mind about it again.
Oh yeah, absolutely. I mean, like you know.
Yeah, or I can just rewatch that. That's a good. Yeah, that's a good point. It's nothing. Yeah, I've seen it. But it's nothing better than current price action. You know, it's a lot. You get a lot more grasp for what's going on. But yeah, that's a good point. Thanks for reminding me.
No worries. But here's basically the local swings that matter on Bitcoin. You got the daily open in this structure, and you got the one that you're bouncing off of. You're bouncing off the low of the swing, so you have a higher chance of reversal as long as you don't test the high of the swing. So. Alrighty, now I really got to go. So have a good one, everybody. I'll catch you. I'll be around. See ya. Yeah. Call it MDVD volume and local price action or Bitcoin price action. Okay. Yeah. Alrighty. See you, everybody.